Hello traders, hello everyone, my name is Gregor and welcome to our new video surfing the Elliott waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the S&P 500, Euro dollar, Aussie dollar, gold and crude oil versus dollar Mexican peso. Well, we are seeing some very strong reversal from risk on to risk off mode for the last few sessions, after a few Fed members said that they should very soon start considering tapering. So this of course has a very bearish impact on stocks, because overall markets were supportive by quantitative easing. So of course if now they will send less money into the markets or investments, that means that of course this will limit the upside. Of course, on the other hand, you may see in the future that rates will continue higher, which also will have impact on investments as well. So what we are seeing is that S&P 500 is coming sharply to the downside, and it's coming down from the upper side of this wedge pattern, or ending diagonal if you want, that I've been tracking for a while. In fact, at the start of the week on my Twitter feed, I published this chart and I said that we are at very important resistance area. And what is happening now is that actually market is approaching this very important 2020 trend line support. So if this one is broken, imagine today is Thursday, then tomorrow is Friday. If you see a daily close below this, and weekly close of course below this trend line, I think that this could cause a lot more sellers here in the upcoming weeks and days, and we could very quickly be lower here into wave 4, hunting these supports. Of course, the 4-hour chart is also very important to get better touch for the near-term structure. So what is here? It's an ending diagonal, as I said, with 3 waves up to a new high, and now we are turning. Still, this trend line of the wedge is not broken. Now, normally when it comes to confirmation, you want to see this trend line broken and also this wave 4. But already current sharp drop here on intraday basis below wave B is an important first signal that we are making potential top formation here, and at least 3 wave drop could take us back to the former wave 4 here. So what is happening on the other hand with the dollar? Well, of course, investors are going into cash. You're seeing the dollar is coming to the upside. At the same time, obviously, euro dollar is coming lower. So if we look at the euro dollar charts that I've been tracking recently, as you know, I've been tracking and I'm still tracking 2 wave counts, because we were and we are still in the middle of consolidation phase here on the euro. So the first wave count here on the left actually shows that we are here maybe in an ABC drop for wave D now playing out towards the lower side of the range. So here's even better picture on a weekly scale, where I'm tracking a potential triangle if current wave D will extend towards the lower side of the range. So this could come in play, this triangle, with more weakness here for wave D on euro, if stocks would, let's say, drop 10%, maybe even more. If there will be panic, then of course those currencies that are already weak against the US dollar will become even weaker. Imagine euro dollar is here, but stocks are here. So if stocks will come to the downside, I think that euro will just accelerate even lower. So that's why I think we have to keep an eye on this wave count as well. However, I still think that this second wave count is also valid. Keep in mind that this wave 4 is now approaching of this bullish interpretation, okay, where I have labeling that maybe wave C is headed back above this. It was, I believe, 2018 highs. So this one is also valid if the support here around 1.1600 will hold. So it's a do-die zone for the euro dollar in general. And as I said earlier, it will be very important what stocks will do, and of course what yields will do. Okay, so I think that also yield differential will be very important driver for the euro dollar pair. But actually, based on the short-term structures, we really should not ignore the current wave pattern here. I still assume that market is in a 5th wave of this 5-wave drop. Okay, so even if we go and will stay bearish, let me just erase these labels to not confuse you. So even if we stay bearish here, you would still anticipate a free wave recovery, because after every 5 waves, market responds with a free wave counter-trend movement. So we are now hunting some supports here. Also, you already have some divergence here on the RSIs as well. So I would not be surprised if actually that this market could potentially slow down, even if just temporary. Of course, as I said, it will be a very important driver for this market. Also, the stock close by the end of the week. Okay, now let's take a look also on Aussie dollar. Now Aussie dollar is also coming to the downside, and I've been looking for this triangle formation in a fourth wave. We have seen a very nice sharp breakdown. Notice that market is now breaking this triangle measurement target. So what is this? Well, you take the length of the widest leg within a triangle, which obviously in a contracting triangle, regular triangle, is wave A, and then you project this level from a breakout point, which should be a trend line, and then this projection come out at 0.7175. So we are currently aggressively actually trying to push prices even lower, meaning that fifth wave can be extended, but unfortunately we never know when fifth wave will be finished unless we see a reversal and confirmation from the market. So we have to be very careful here. Keep in mind that Aussie has been, because of COVID cases, because of lockdowns, has been one of the worst currencies recently, and if stocks will come to the downside, I think that this will not change. So it's very important just to be aware that this current risk of sentiment could have a much stronger bearish impact on Aussie. But from an Elliott wave perspective, of course, whenever we get a bounce, let's say that we retraced all the way back towards this previous swing low with one leg, well, then I would be quite confident that at least temporary rally is in progress back to the triangle area. Keep in mind that moves after a triangle, after all, are final pieces within a higher degree trend. So of course, as I said, I don't know where fifth wave will end, but I still think that this is the final leg, but it can be extended, unfortunately, especially under these conditions. Now let's take a look also on gold. Well, that's pretty interesting. Now gold is doing quite well. Probably it may stay sideways or even bullish, because traders will look for some other investments. Keep in mind that gold has been sideways since last August. It's been more than a year now, and I think it can be very attractive, especially if stocks will somehow come under pressure even more. Keep in mind that despite dollar strength and stocks weakness recently, gold is doing quite well. So imagine if maybe dollar just temporarily finds resistance, I think that gold will continue higher. In fact, this looks like a very nice potential bullish impulse when looking at the hourly chart here from that August lows. So this could be wave 1, wave 2, wave 3, wave 4, and now ideally wave 5 towards this sharp drop that occurred last Sunday, Monday. And now we are trying to retrace back to this area. So maybe this could prove to be some very important resistance area. Why? Because that was the price or region where actually a lot of orders caused this, short orders caused this breakdown. Okay, and now usually when price retraces back to the same area, the same orders or similar orders, especially break-evens, could actually impact the price. So we will see how this will unfold in the near future, but I really think that if we get this wave 5 to the upside, this could then fit perfectly to be wave A as a first leg that belongs to this wave D of a triangle. So I still think that we are in the middle of consolidation, but at least in the near term, the price action will then suggest, if we get these 5 waves up, that we are headed towards the upper side of this range. Okay, and this somehow could also have a positive impact on Aussie if we'll keep seeing further gains here, especially after a pullback here on gold. Now let's take a look also on crude oil. Now crude oil is making another break to the downside. Okay, but notice that on the 4-hour chart I'm actually observing two interpretations. Well, the first one is that maybe we are in the middle of a big flat correction and that we still be headed lower because I'm tracking a higher degree correction. Why I'm tracking a higher degree correction, the reason is very simple and visible here on the daily chart. Notice that this was wave 1, wave 2, wave 3, wave 4, wave 5, and obviously I'm observing a corrective pullback. Now, this is one interpretation where I said that wave B could still be unfolding as a complex one. In such case, these supports around $60 per rare or 61 should definitely hold. That's the first support. If we'll continue lower, then maybe we are already at the final stages of the whole corrective retracement towards this wave 4 supports, and then I would be tracking a double zigzag where I would label this to be the first zigzag, then a wave X, and then a second zigzag a little bit deeper. But in either case, I think that this could be quite interesting if this market will try to stabilize at this level. When I'm looking here at the daily chart, around, that's even lower support here around 57. But if we see a bounce in 5 waves, well, that could be still very interesting for some commodity currencies like Mexican peso. So looking at dollar Mexican peso, of course we are rallying now based on overall dollar sentiment, but I still think that what is important here is the big picture. This is still a downtrend and we are now just consolidating, so I think that this wave A could see more weakness, but not now. After a breakout, maybe this will take a few weeks, few months to unfold. So what I'm looking at here is wave 4 to be part of this wave A that is incomplete. And now we are rallying here, so it appears that wave E is going to be more complex than I thought on the first place, but still it's a valid formation to be in final stages of this triangle where the price could actually stop maybe at this upper trend line. So we'll see what happens by the end of the week, especially next week. I just think that upside could be limited. If suddenly we maybe go here back towards these June highs, then this triangle will unfortunately be much more complex, but still part of a higher degree downtrend in my opinion. Traders, thank you very much for your attention. I hope that you enjoyed this video and talk to you soon. Bye.